seeing so much of the shilling and bullshit that goes on in the crypto community. It was completely refreshing to see a group of guys with that Chicago mentality that my word is my bond, because, you know, it's such a needed thing in the space.
So the market decided to do something since the last time we talked. Remember that? We were sitting there talking about if it was going to fucking do something.
Yeah, Bitcoin's on timeout in my box.
Yeah, I don't know if it's on timeout anymore. Shit.
No, it sure. Well, for me, you know, it still hasn't. I'm a standard deviation trader, and I also pay particular attention to the slopes of lines, of these standard deviation lines, and
Okay.
it's given up the ship on the daily, but it for sure hasn't given up the ship yet on the weekly and the monthly. It takes time, you know, for those longer time frames to evolve and to tell the story. And we talked about it yesterday. I know that Barstool Sports, Portnoy, very popular and with a lot of people, and he's been pumping PENN Gaming. And when you look at that weekly chart, it's, you know, I said in yesterday's Market Vitals broadcast, I'm a 30-year commodity trader, and if that's a commodity chart, I am telling you fully to abandon ship.
Jump off.
Yeah, and so it takes time. It takes time for these charts to evolve,
Right.
and for the potentiality to change.
Mm-hmm. Yeah, you look at the weekly Bitcoin chart, and you're like, God damn, there's no way this doesn't come back to 20
You know what?
at
If you
some
want,
point.
can I share my screen? Can I show you exactly what I mean?
Yeah, go ahead. Yeah. 1 sec. Let me.
You're just like my guy Matt. Not allowed, no sharing available.
Oh yeah, well,
Are we
actually,
pushing live right now, by the way? Or are you recording?
We're recording it, yeah.
Okay,
So
perfect.
we might have some people actually join us from Beaxy Black here in a minute.
All right, hold on a second here. All right, this is Bitcoin. This is the daily, right?
Okay, right.
That's what you're seeing. This lower line here is what I call my definition of momentum. So now we spent 4 days in a row here kind of respecting this momentum line. But the negative is that the slope is negative now, right? The slope is falling away. You have falling away potential on these two lines. But if you fractal out to the weekly, it's, you know, these bands are still upward sloping. Now they haven't been able to hold this up momentum line, right? So it's a developing story, as opposed to, let me jump to PENN Gaming. You know, and I'm a big believer that the chart is so look how different this is. Now this is fully in low momentum. Not only that, but these bands have all rounded, right? And now you have falling away potential on the standard deviation modeling. That's a different setup. It was very similar to what Bitcoin was up into here, right? But as soon as they couldn't hold this, the weekly average in PENN Gaming, and then they had 2 weeks where they tried to recapture it, they couldn't. And then you see the last 2 weeks, especially last week's lower action. It was about the same price point as it had been in the past 3 weeks, right? But this line now, this lower momentum line, has kicked the other way, and that's significant. You know, we talk about market vitals as being your levels to triage the market. This is the nuance in trading, that triage is different. If this patient comes in and their blood pressure is collapsing, you need to do something, right? It's a different situation when they first came in, and so that's what I mean. I mean, this is PENN Gaming, and it looks like it wants to completely fall away, and unless it can recapture the weekly momentum level, it's like goodbye. It's gonna retrace, and so that's what I mean about nuance, slope, you know, time frame. All these things are important for my analysis as a standard deviation trader.
Yeah, it doesn't look healthy, right? So, did you have Bollinger Bands and EMAs on there? Was that the?
Yeah, I have a modified Bollinger Band approach to standard deviation trading. So Bollinger, you know, I think he's one of the most brilliant guys ever, because he took and I didn't know this, the history of standard deviations is only back to the beginning of last century, like early 1900s.
Yeah.
Most math stuff is much older than that. But
Yeah.
but he took a 100-year-old math equation, right? And he put his name on it. And he
Yeah, there
actually
you go.
trademarked it. The guy's brilliant, you know.
Brilliant.
So yeah, but I think so. Bollinger Bands generally is his default is 2 standard deviations of a 20 bar moving average, right?
Okay.
And he's gonna, and again, here's a little nuance here. He's gonna call that exhaustion. Well, it's
Yeah.
exhaustion as long as that band is relatively flat. Once the band gains slope, I've seen more people get carried out saying, well, it's into the 2 standard deviation Bollinger Band, I should be selling it here. Yeah, that's great. You
Yeah.
know, if it's trending, it's just going to keep shoving that position in your rear end as long as
Yep.
that band has slope to it. The other thing that he
Yeah.
doesn't do, that a lot of people, a lot of professional traders do, he has a definition for exhaustion. That's his Bollinger Band. But he doesn't have a definition for his momentum. And so we call it the Market Vitals envelope. We run an envelope, which we have one set of bands that has a different parameter than that exhaustion parameter. It would take you very long to figure out how we did it. But so you have a momentum line and then you have an exhaustion line, or we call it a collar line. And so I ebb and flow and pay attention to, are we in or respecting that momentum? Have we exhausted? Have the bands, you know, what are the slope of the bands? These are all the things that are going on in my if-then statement in my head. As a trader, it's you know, we say it all the time, it's a developing story, and it's always developing, you know?
Yeah.
It's an if-then statement that's always going on.
Right. Yeah, there's so many different factors. I mean, I'm no god tier trader like you, right? You made a career out of it, right? So I just know there are so many different factors that go in. You're talking about momentum, right? And they're looking at the math equation and they're going, well, it hasn't hit it yet, and like you said, they're just getting it shoved up their rear. So it's just a bunch of different things that you're always thinking about, right? So I wanted to ask you though, is so standard deviation trader, right? Are those the main criteria when you're looking at taking a trade, when you're looking at exiting a trade? Like what does that kind of look like for, Beaxy Black users? How can they, use this in
For
their
sure,
everyday trading?
there's no shorting available at Beaxy, correct?
Correct. Yeah.
And so for sure, and I say this all the time about, you know, coming from the commodity world, especially where people think they have inside information on commodities. You know, they think they have a better idea of what supply or demand numbers are going to be, and they want to trade one direction or another in a marketplace, right?
Hmm.
And so depending on your time horizon, a lot of people, and you know, at Market Vitals, we have this daily sheet up every day, and it covers cryptos and a couple of crypto pairs. And for sure, if the market is trading below or above a momentum level opposite of your opinion of the market,
Okay.
please have some patience. And it's
Yeah.
almost like prove the negative. Show me an absence of weakness and I'll jump on board. And I think that's important for Beaxy players. And I myself, I don't trade the short side of crypto very often, but it gives me the patience to wait for better trade setups, and then actually wait if you're in lower momentum, for instance, like I just showed you that we are in Bitcoin.
Yeah.
Like at least I'm going to wait for the patience for us to close out of that lower momentum level on a daily basis. And
Got it.
so
Yeah. Okay. Go ahead. Sorry to interrupt you there.
no,
What were you
so
saying?
here's the simple fact. There's hundreds of indicators, and each one of them you can change how you're driving the indicator. There's literally an infinite number of technical setups that you could that you could start to look at. The important
Right.
thing is finding something that resonates with you, that makes sense to you, that makes you a better trader, and sticking with it.
Okay.
It's like you gotta continually hone what you're looking at, because there's too much information for any one person to take in, you know?
So you mentioned trading the downside, right? You can't shorten, unfortunately, on U.S. crypto exchanges, right? So would you recommend dollar cost averaging if you're in an open position
For
like that?
sure. You know, I have no problem with that as a long-term solution. And so when you fractal out to that weekly and that monthly, you know, and there's a couple other things that I would look at too. My partner on Market Vitals is actually a market profile. That's his specialty.
Okay.
So you look for high volume areas, lower, or for on the weekly and the monthly. You look for those longer term moving averages or the longer term momentum levels, as long as the slope is still in your favor.
Okay.
And
What
you
is
know, I think the key is being patient. Like everybody, every new trader, and believe me, I've been doing this for a long time, and I still struggle with the patience of waiting for the trade setup.
yeah,
And so that's just
it's a tough one.
incredibly important to stick to the patience and wait for the level.
Yeah, exactly. So are those so divergences are the main indicator that you have found successful throughout your career? Are you looking for like bullish, bearish divergences using those Bollinger
Um,
Bands and
so
momentum?
for instance, in Bitcoin, like I just think that it's the run that this thing has had in
Hmm.
particular, it needs a correction. And so, and the unfortunate thing for the hodlers is the way the chart is built. There's so much potential on this correction. All right,
Yeah.
if you want to just talk levels, um, the 13-week moving average is right around what is it? It's come on, not that. There it is. 51,000, 51,272. The
Hmm.
opposite momentum level is more like 43,000. I mean, so there's a lot of room here for this
Right.
retracement. And I
Yep.
saw Pomp again today say, somebody else was saying that he thinks that a 50% retracement is in the cards he's calling for. And
Yeah.
Pomp is like, no way. I'm like, what do you mean no way? Look at the chart. How can you say no way? If this was
Yeah.
and I will tell you this, if this was a soybean chart, I'd say of course that's possible. Or if this was Goldman Sachs chart, I'd say of course that's possible. I mean,
Yeah.
the chart is built from price activity, and the price activity and when you look at a chart, if these levels don't hold, those are the natural, I call them magnets. Like that's what the chart,
Oh yeah.
Rob,
that's the level.
that sort of begs the
Don't kill the
question is,
messenger. I'm just telling you that's the level. And I got to tell you, in 2017, 18, I was involved in a coin project, and they didn't respect the levels. Right? They raised the money in Ethereum, and they watched their whole bankroll, $10 million, go to less than $1 million. Like you got to respect the years and years and years that people have been trading, and
Right.
it's I
you've
don't
teed
know.
us up perfectly for the question here, which is crypto actually different as an asset class from anything else? Like having come to crypto as an experienced trader already and trading traditional markets, did you have to adapt significantly your trading strategies? And is
I
crypto different per se, or do you trade it just like
I would
anything else?
say 100% no. And as a matter of fact,
Mm.
early on, I talked with more than a few seasoned traders, and we said crypto is very obedient, meaning that
Okay.
the levels hold really well. The technical trading levels are, it's very obedient. It acts, it behaves very nicely. And what that
It's
tells
interesting you
me
say that.
is there's a lot of very experienced money playing in this space. And then there's a lot of very inexperienced money playing in this space. And, there's a
Makes an
So
slaughter
interesting
that
mix.
happens. There's a slaughter
that's an
that happens.
interesting Yeah, that's an interesting point. And maybe this is just my own personal view, but I felt because I got in 2017, right, the ICO craze and all of that. So I felt like a lot of it was based on technicals, and a lot of people were trading the charts and whatnot because there wasn't a lot of fundamentals behind it, right? A lot of these things would just run up, and then okay, well, what do I do with it now? What am I looking for? And I have always felt that it's very obedient like that too, right? A lot of the support and resistance tend to make sense, where to place your limit orders, right? Do you find that when you're placing orders, are they more aggressive, like a market order, or are you placing and waiting for it to hit your levels?
No, I've been around long enough to at least look at the book. I will never
Yeah.
place a market order in crypto, and I will never put a stop without a limit in crypto. I mean,
Yeah.
and I said this forever. I mean, the electronic trading environment coming from a floor trader, for sure, it's great a lot of the time, right? But on the edge, it is way more dysfunctional than the worst order filler that was ever born and blessed with a badge to fill orders on any trading floor ever. I mean, and it's just because of the architecture. Like there's a famous market profile guy's name is Pete Stottlemyre. He basically wrote the book on market profile distribution and trading. And he talked about, as we went electronic, how vertical the markets had become. And he made an interesting point that the pit and open outcry price discovery, what it really did was add time to price discovery. Now think about that. If you give me an order to buy 100 Bitcoin in a pit, I would have to turn into the pit, say, hey, what's here? Somebody would actually have to say, I'll sell 10 at 55, 780, 55, 780. I'd say buy 10. Yeah. What's here now? I'll sell 10 at 82, buy 10. What, so there's time that, and then people say, hey, look, somebody's buying in Bitcoin, and people would perk up and they'd have their offers, or they'd run into the pit and they'd have their offers. Yep. In an electronic environment, the computer just looks for the next best bid or best offer, no matter how ridiculous that best bid or best offer is. And instantaneously, it goes and exposes that price. So, and there's still that lack of liquidity, especially when things get, when the markets get a little jittery, where there's just terrible price discovery. And therefore, if you have a stop without a limit, you can sell percentages worse than you should.
Do you use things beyond pure technical analysis, like sentiment analysis is a pretty evolving field, for example, when it comes to crypto, gauging, because it's drawing such a huge retail crowd. Do you use tools like that?
You know what? I'm a big believer in that. If you have the so-called scrubbing capability to monitor, I'm sure people are making money doing that.
Right.
And of course that's legitimate. The more the chatter rooms but you need some infrastructure. By the time you had in the question box, like how have you seen markets evolve? And they continually are evolving, right? And so this is a perfect example. I don't have the ability to gauge that sentiment in real time fast enough to compete with somebody that's written the program and can cover 10 different social networks and has a really good idea when those sentiment things are going. I mean, we used to say back in the day in the pit, you get a wire order. Now, literally, this was an order to trade a highly leveraged commodity, and it would print out on a sheet. And they tear it off, and a runner would walk it to the pit, and you'd get it and look at it. You have to put your glasses on if you were older, and then you'd execute the order. And we used to, as order fillers and traders, exactly be like, who the hell is buying, Deutschmarks here on a wire order? Like, this guy's like what is he, a dentist in Kansas City? Like, and somebody talked about Deutschmarks and he calls the order in. I mean, how far removed from price discovery? This guy's got no chance. And I'll never forget sitting after I left the pit and I first evolved onto the screen and trading, and it was fairly difficult, right? And I turned and looked at the guy next to me and I go, you know who we are? And he's like, no, who are we? I go, we're the fucking dentist in Kansas City now.
So a great stereotype.
Yeah, like it's full reversal. So you got to.
I mean, there's a guy that we were just talking about the other day. He built a bot where every time Elon tweets about Bitcoin, it buys at that point in time, right? Because every time Elon's tweeted about Bitcoin, there's some upward price movement, right? So he figured that out and created a bot for it, right? So which kind of brings me to my next question. This was actually from one of our users, Juggy. He asked he'd be interested to know if you use any bots to trade, right? This is obviously what the majority of trading has gone to, or do you do it old school, right? Do you do click trading?
Interesting, because I am currently working on the fiat side for a gray box interface. And what I mean by a gray box is it's a market entrance facilitator, let's call it that. I think the hardest thing for especially floor traders that have, and almost, you know, I am a true 1%er. Most people just never were able to make the conversion, right, to
Right.
screen trading. Because when you're in the pit, like the screen never says what's here, what are you, what's your bid and offer. Like nobody ever asks you to participate in the market. When you were
Yeah.
in a trading pit, that was the whole thing. You were part of the price discovery. Back to the dentist in Kansas City. How's he going to ever make any money? And so I find the hardest thing for me is actually pulling the trigger to get out. I mean, to get in. I got no problem getting out, taking profit or taking a loss.
Yep.
And so I'm automating that process of entrance. Like I want the bot just to say, hey, guess what? You're long. Or hey, guess what? You're short. Hey, I got you shorter. Hey, I got you even more short. What are you going to do? You know, put the decision-making process on me to manage a trade rather than getting into the trade. And of course, I'm doing that with, you know, with a logical methodology. It's not just a coin flip, but yeah, for sure.
That's interesting. So you're saying that you don't have an issue getting married to a trade. Your issue is right, because if you're married to it, then you just hold it all the way down. You're like, well, shit, right? So your
Exactly.
issue is more getting in, which is interesting because that's not the way that typically the market, you know, people would respond to that. So maybe that's just experience, or why do you find that is?
Yeah, I mean, again, I sometimes give myself information overload on the in and say, well, it's
Okay.
a good trade setup on the shorter time frame, but look, maybe I should be patient for the longer time frame. And so I'm working on a gray box model, and I actually think this would be really good as a market maker model also. Like there's sometimes I
Okay.
think in a market maker situation where if you had the ability to program this, you should just be the best bid always. And especially in
Right.
crypto where you can tick the bid by a fucking thousandth of a point or something ridiculous,
Yeah.
right? And so if you're like this market is showing momentum, I always want to be the best bid and take a
Right.
certain portion of the trade activity. And you know, at the same point, if we're in an upward momentum, why do you want to be the best offer in something that's raging higher, right? You're just going to
Going
continue
up. Right.
to get clipped. And so, you know,
Yep.
I haven't done that yet, but feel free to take my idea.
No, I
Definitely.
think we'll
Anybody
leave that
out
one
there?
with you.
I mean, so sometimes that, and again, that goes back towards it's kind of the mentality of a pit trader, right? So when you could feel when especially in currencies, right? When the dealers were always on the bid, like they were the best bid, you know, the cash market was going higher and they just wanted to make sure they participated with anybody selling. You know
Yeah.
what I mean? And so whatever you could get on the bid, it was like free money, man. You were going to flip it, no problem. Whereas if the market's rallying
Yeah.
and you're the best offer, you get lifted and the market's in your face right away.
Yep.
So that's where I get that idea or that methodology from.
Well,
Hey,
that's
Rob,
actually
one of our other members wanted to know too, if you're into any kind of market making, and if you are, what kind of risk management tools you would utilize when doing so. I don't know if you use any market making strategies or not. He said specifically there's a problem when a coin is mooning hard, you know, pumping, which leaves one side completely soaked up and the other side lingering on the order books, right? Do you have any
You know what?
anything on
I
that?
don't have any bots going. It's something I fully intend to investigate. And right back to this last point that I'm making, if you have some metric that you can judge, whether it be, you know, breaking out from a profile, moving averages, crossing, something that says to you, or just your market making bot, I just keep getting lifted and I can't even scratch them. Like
Mhm.
it seems to me that you'd want to be more of a market maker / scalper. So if the market's rallying, just be the best bid. Just try to capture the bid side of the market, and then manually, you know,
Right.
I know a lot of the market makers, they come with, if you get it, it automatically releases the other side of it, the profit taking side. So
Oh
yeah, I mean,
God.
I
Okay.
think, and again, you know, I think this is like called lean. You know, I'm a market maker, but I'm leaning. I'm not just going to be the best bid or the best offer and hope for the best, especially as vertical as these markets are, man. They just start running. And if you're the best offer or the best bid, depending on the structure, they're going to carry you out.
Yeah. Okay, Robert. So that sounds good. Let's we kind of jumped right into it here, right? I think maybe just round it off with, you're a 27-year CME pit trader. What were some of the assets you traded? Why did you decide to get into trading? I think we can round it off with
Yeah.
what we maybe should have started with.
I had a older brother, two older brothers that were on the floor when I went to college, already trading. And my dad's best friend back in the day was the chairman of the board of trade. So I had inroads for sure to trading. The second thing is, once you went to the trading floor and you saw that you were going to work from 7:20 to 1 in the afternoon every day, and all your friends were going to be schlepping till 5, it was, it was such a no-brainer. Like,
Hard to
what?
ignore.
I mean, I can't tell you when I was young and dumb how many times on Friday, they'd have to pour me into a cab at 8 because they'd been drinking for 3 hours, but I'd been drinking for 7. Anyway, it's another story, another time. And so, yeah, I mean, I got my finance degree at Western Michigan and got right in. It was kind of right when in the early mid 80s when the foreign exchange arbitrage and the foreign exchange markets on the Chicago Mercantile Exchange were really popping. It was just it was an awesome place to work. I mean, you could make money, and there was a lot of different ways you could make money, and you couldn't beat the hours.
Yeah. Were some of these places that are still around here there back then? I'm sitting in the board of trade right now, right? So we're very close to Tudo's. I think Turo's is new, right? But were some of these places Bonvino? Were they all around here when?
No, you had Series over there, and
I
was at the Merc for most of my career before we went over to the Board of Trade, and there was a bar called the Limit Up, and then across the street there was Blackie's, and when they built the new Merc, that River, what is it? Riverside, Rivers.
Okay.
That would always pop in the afternoon, in the summer especially. It was great, and I was one of those, I refer to the Johnny Cash song, "I've Been Everywhere, Man," because as electronic trading started to percolate, like I suffered a slow death in the Deutschmarks, which turned into the euro. And once and I was an order filler to begin with. When I first got my badge, they banned dual trading. So so my strict trading evolution was delayed because I figured, what, I can make great money filling orders and take relatively minor risk. Turns out that the risk of filling orders can be monumental. But then I went to the euro yen and the euro dollars, and then they started the Mexican peso. I jumped in there, and we had a 6-year killer run in the Mexican peso. And then as Pitts just kind of died, and then I ended up in the hogs in the agricultural quadrant, and that lasted right until 2014. I mean, we had a great run in the hogs. And again, you kill it and you're done at 1, you're on the golf course. I mean, we used to, when the first pitch at Wrigley was 105, right?
Okay.
The market would close at 1 o'clock, right? And we used to have pools on, like, who can get a 12-pack, get in a cab and get to Wrigley first. And you need the 12-pack for the ride, right? Anyway.
Okay. Yeah.
But yeah, so I traded a lot of different instruments, and you know what? Being a technician, that's where I kind of evolved to. The price discovery is the same no matter what. Like longs have strong hands sometimes they have weak hands, and it shows up in the chart.
Yeah. So what is I guess we'll round it off here, but what is the best piece of advice that you could give to someone looking to maybe not make a full-time career out of it, but looking to get into trading, right?
Well, for sure. I mean, I think you got to fractal out if you're not going to day trade, right? You have to be looking at weeklies, maybe the 3-day. I like the 3-day on TradingView. TradingView is just a great charting free software.
That's great.
And it's got to become, here's the fact of the matter. It's your money that you're going to make or lose, right?
Yeah.
And so trading is the greatest game because at the end of the day, it's just you. And so you got to have you can blame whatever you want to blame. It doesn't matter. It's still just you. So whether you're going to be investing long term, what kind of trader do you want to be? What makes sense to you? Does the profile make sense to you? Does moving averages make sense to you? Does standard deviations make sense to you? There's so many. You pull it down, the indicators, there's hundreds and hundreds of them. One of those is going to make sense to you where you can make better decisions on managing your risk and allowing your profits to run. And that's it, man. I always talk, I've been doing this Market Vitals live segment, and if you're not talking fundamentals about something, which you could talk to forever, for me, when I look at something, I look at 2 or 3 charts and I can tell you what I think in like 38 seconds. Like, so how are we going to fill the 5-minute segment? I'm like, I'm long, you're an idiot. All right, what's next? Or I'm short. Well, good luck with that. But it's an I go back to it. It's an evolving story, and that's what it's going to continue to evolve, whether you like it or not. And it doesn't really care about your P&L whatsoever.
Right. So those longer time frames, more swing trading. Is that kind of
especially for
unless you're not doing it every day.
The chart, and this is crazy about Bitcoin. While I'm looking at the Bitcoin chart, I said the lower momentum level is $43,000, somewhere in there. The lower collar, the Bollinger Band collar or exhaustion level, is all the way down at like $28,000. So when Pop says this thing can't get halved, I'm like, dude, it could get halved and it wouldn't even be mathematically abnormal.
Wouldn't even be an anomaly.
It wouldn't even be an anomaly, exactly. And so and so sometimes the best and it really had, these bands on the weekly haven't fully rolled over like I showed you on PENN Gaming, right? And so there's still, it could hold 50, it could hold 43 and still be good. But believe me, if we go in a couple of weeks here, right, and we check those levels out and we're not able to rally away from those back higher again, and these bands fully roll over, now you got to really consider that there's going to be a further drawdown. And when people are like, you're crazy, I'm like, yeah, I'm crazy, but I've seen people carried out of pits. I've seen them lose their houses because they said this can't be. Like there's not enough soybeans. This chart can't do this. I'm like, yeah, okay, great.
Yep.
Good luck on lower whacker in the Amana box. And by the way, the Amana box, they got the big double wide one. That's not a bad one to live in if you got to be on lower whacker. You could actually have room for like a sitting room in that thing.
Whenever the portfolio takes a dive, start looking at boxes.
Hodlers, maybe that's our next meme. Like hodlers, Amana boxes for sale.
That's awesome. So
hey, you know what? Here, the other thing too. Let's just say again, this is an evolving trade, and I could see this happen also. I could see that we go trade down to, let's say, 43, 44,000, right? And it kind of finds a nice base there, right? And then we spend, look at from June of 19 to 2020. It was sideways in a $2,000 range for 6 months.
Forever.
Right?
Yeah.
But I think if we do this, if we consolidate somewhere here, let's say 40,000 to 50,000, it's just saying, and that maybe that keeps collapsing and we end up in a $4,000 or $5,000 range for months. I really think the alpha in the trade then is going to be the alts. It's going to be awesome.
Yep.
And I think that's just an incredible part of the story. That if you're going to hold Bitcoin, why hold Bitcoin if it's just trading sideways? There's tons of alpha to be had to be trading the crosses, and that's why we supply a cross chart at marketvitals.io. So at least you have some levels on value ranges, on pivot models and pivot targets, and on the standard deviation levels. We have people that subscribe to Market Vitals. That's all they do. They come onto the site to grab that sheet every day. So they have some sort of baseline on, add a layer of discipline here or there, and it's all the difference in the world. And the other thing, at marketvitals.io, what we're trying to build out is just this, it's more of a pit conversation. It's like, this is what I have. What do you think? And you better be prepared for not to people to, be nasty or anything, but to be like, I don't know what you're looking at or what you think, but this is the way I'm looking at it. And right now you're holding all the risk, and the market hasn't proved to me that you're on the right side of it. Back in the day, I remember talking to the chief dealer for dollar mark at Chase, and I'll never forget this. And I speak sometimes with a little bit of an Italian accent because as a young Chicago kid on the floor, I talked to Anthony Scamadella from Brooklyn, who ran the desk at Chase. And Ant, how's it going? He's going, you know what? This morning sucked. It took us a while to get on the right side of the market. So they were market makers. But again, like if they were selling marks and the market was getting jammed, he was like, man, we're on the wrong side of the market here. We gotta make our bids better and our offers again. And I'd never forget that. Like that's a trading nuance. Like if you don't think to yourself routinely, am I on the right side of this, or am I just being stubborn? And I think right now, for sure, on the daily in Bitcoin, if you're long, you're not on the right side of the market. It's got to close back above that daily lower momentum level. The momentum now is lower on the daily, right? Yeah. And so if you keep buying it and it keeps getting shoved in your face, you got to be saying, I'm not on the right side of the market. Obviously, I'm not on the right side of the market because every time I buy it, it gets jammed in my face. Anyway, it's a little nuance on, what questions are you prepared to ask yourself? And then are you prepared to act when the question you're asking yourself does not align with your position? Very important.
Right. Okay. Yeah. It's just that constant analysis because things change all the time, like you were saying in the beginning.
Forever.
Right. Exactly. So, Robert, thank you for hopping on with us. Robert's from marketvitals.io. His Twitter handle is HFR from the floor. He's an experienced 27-year CME pit trader. And Robert, we'll be looking forward to doing this again, man. Thank you so much.
Oh, anytime, man. Anytime. I love talking markets and more importantly, dysfunction. Good luck with your dysfunction, by the way.
Okay, we appreciate it, Ed.
All right,
have a good day.
Thank you.